Alrighty, folks, we are so lucky to have the amazing team and leaders of Convoy Home Loans. We got Dustin and Jonathan. Dustin, how are you?
Good. How are you?
I'm doing well. And Jonathan, yourself?
You missed it,
I
Jonathan.
did.
You.
I thought about it, but I was like, I don't want to repeat it just so soon, so
I'm all
soon. So
right. I'm all right. Yeah.
here you go. Well, guys, let's talk about this kind of catch-all conversation. Let's talk about prepayment penalties. Let's talk about when a prepayment penalty might make sense on a smaller loan. Let's define that. Let's talk about DSCR loans and any other kind of catch-alls that are going on in the market. Who wants to start us off?
Who? I mean,
I'll start. Oh,
yeah.
Dustin, go ahead.
I so prepayment penalties are obviously a big talking point when we're speaking with a lot of our clients, and most people that invest in residential real estate, even commercial, know what a prepayment penalty is. And the biggest thing that we're coming across is a lot of our clients are like, I want something with no prepay, right? I want something so in a year from now, if rates go down, I want to be able to refi.
Ah,
And
yeah.
that conversation between John and I and our clients probably comes up every single time, at least
Sure.
for the first time we speak with somebody, right? And what we're noticing, so when you're speaking to either John or myself or your loan broker or lender, you need to know the price difference in two different ways. Like, how much does it actually cost for me to go with, let's say, a 3-year prepay versus no prepay? Okay,
Okay.
for example, for this conversation, we'll say the difference between no prepay and 3 years worth of prepay is maybe an additional 2 points, okay, in closing costs. So let's
Yep.
just say $200,000 loan amount, right?
Mm-hmm.
If you go with a no prepay, it's going to cost you $4,000 more than if you go with a loan that's on a 3-year prepay. Now,
Ah,
most of the times, our 3-year prepay is going to be on like a 3-2-1 step down. Okay, so very common, but
yep.
to explain to your viewers, the first year, if you were to refi, you're paying a 3% penalty, right?
Yep.
So
Mm-hmm.
that situation, you pay $6,000 if you refi in the next 12 months.
Okay.
In year two, so month 13 to 24, you'd pay a 2% penalty. Okay.
Right.
So that's identical to what you would have paid up front
Mm-hmm.
to go with the no prepay. Now in year three, obviously that's 1%, and then after there is none. So the
Right.
question that you're asking yourself when you're deciding, do I want no prepay or 3 years, is, am I 100% certain that I'm going to refi in the next 12 months? Or better question, am I 100% certain that rates are going to be low enough for me to pay closing costs and refi and get the benefits still in the next 12
Yeah.
months? Most of the time, at least for John and myself,
No.
you're getting in some bridge that's at 11 or 12%.
Yeah.
No, rates are not going to be 100% better enough in the next
Yeah.
12 months for it to make sense.
This is why I hope people at One Rental at a Time are realizing they got to work with the folks, like yourself, that I bring to the channel, because that's a healthy and a correct conversation. I think there's a lot of folks that are like, no prepays. I'm out of this. I'm going to marry the house and date the rate. All that nonsense. That's a heavy lift, right? If you're talking 3 points, you're gonna refi, which ain't free. I think people need to do the math, and most of them aren't out there doing that. So, Jonathan, uh, how do you think about prepays? How do you help somebody coach them? I think small loan amounts are a special place. So, define small loan.
Yeah, I mean, obviously being in LA, we think anything under $1 million is kind of small, but
Yeah,
across
you're
the
warped, dude.
across the
There's
country,
yeah, it's a big country out there.
yeah, across the country, it's I think smaller loan amount I would say is under 200 grand because
Okay.
that's when you even do a principal and interest payment. Your principal payment on even 8% versus 7%, that's like barely $100 difference, right? So
Exactly.
that's why we kind of anything under 200, we're like, hey, like we really don't think it's worth you actually paying for everything up front out of pocket, because at that point when you're buying the property and you like pull it
Yeah.
out and you're doing it
You're,
out of pocket, you're paying it, right?
yeah.
When you do it later on, when you refi, potentially, right? Let's say it's a penalty, you can wrap it in,
Yeah.
right?
You wrap it in
So
the
it's
loan.
not like you're
Exactly.
actually, yeah, exactly. So you're not actually paying for it. So you actually pay less wrapping it in the loan than you do out of pocket right now, because it's cost of money now versus
Mhm.
wrapping it in and then let's say amortizing it over 30 years later, right? Because you don't really truly pay the closing costs until you pay off that loan or
Yeah.
whatever you're in, right?
Yeah.
So we've been having that conversation with clients and kind of advising them like, look, it's not really like it's not worth being obsessed with a no prepay. And if any loan person tells you no prepay is the way to go, you got to go this way, pay extra right now, they're leading you the wrong path.
Absolutely.
It's
Again, it's math.
yeah,
It's math,
yeah,
and
exactly.
I do
And
think there is
yeah,
a talk track, like you said, Jonathan, of people preaching no prepay, because it makes logical sense, right? But anytime logic comes in with you're not experienced in reality, you can make really bad financial decisions.
yeah. I think it's more emotion too because it's the emotional attachment to not having like handcuffs, right? People don't want to have handcuffs. And here's the other thing that in our last video we talked about liquidity. Here's the other thing that I bring up to clients every time is, hey, you're buying it with a DSCR loan right now, let's say, right? Uh, who knows if DSCR will be there next year?
Yeah.
Right. Do you have a crystal ball knowing that
Yeah.
DSCR is going to be there next year? Because
Hey,
Dustin and
guys,
I,
loan products disappear all the time, guys.
yeah, yeah, and we've seen it almost disappear twice in the last 2 years,
Yeah.
right? And we were like one of the last loan brokers offering these products last year when rates just went crazy. So, is there any real guarantee that the way that you're buying the house you'll be able to refinance again in the future? Right? Are you just because you're not filing good taxes now, do you think in a year you're going to file amazing taxes all of a sudden? Right? That's not really how it works, right? So these are the tougher conversations that we have with clients. And sometimes some clients just don't like us for it because we just tell the truth. And then there's someone else saying, oh, no, you should do it. This is the way you got to do it. And it makes them feel better. But they're not actually doing the calculation and the math of, hey, it doesn't really make sense, especially like Dustin said, even if the rates go from, let's say you buy something at 7.5% and the rates go to 6.5% on a $200,000 loan, you're maybe missing out on 150 bucks of cash flow.
Right.
That's it. Right. So you're paying $4,000 up front now to lower your payment. It's like it's not really worth it.
Yeah, I just wish more folks would talk to loan brokers like yourself that'll give them the options. And that's what, again, people at One Rental at a Time tell me when they work with you, and they're like, those guys went the extra mile. They went through multiple programs and options. Not everybody moves forward, right? Because maybe they don't get the deal or whatnot, but you've always delivered. So I appreciate you guys for that. You guys also have a DSCR product that's still working. I think I heard somebody said there might be in the sixes, or what am I hearing?
Yeah, we so to share with your viewers, like we can still get it down to 675. That's our floor rate, is what we'll call it. On the DSCR product. Now, we've been calling it, I think 3 weeks ago when we made our video about DSCR rates and DSCR loans being lower than conventional.
Yeah, I remember that.
Because we hadn't moved when conventional had. And on Wednesday, John, I think it was, or Tuesday, correct me if I'm wrong, we had our first rate sheet still has 675 on there, but we lost about 50 bips worth of pricing. So what used to be, let's say your par rate with no points was 7%. Now that 7% costs you an extra 50 basis points in cost. Okay. Right. So we had a little bit of an uptick, and it was something that I thought was going to happen, and John and myself thought would happen 3 months ago or 2 months ago or a month ago, and we held strong until basically Wednesday or Tuesday this week, it hit. So, we still have the rates there, but you got to be in the right bucket. You got to know that, hey, if I want 70% or 75%, why don't I ask Dustin and John, what's 69%? Is that extra 1% going to make a difference? Is that,
sometimes it does.
It does. Like every 5% bracket on loan to value, every 20 points in credit score, all of those make a big difference. So don't be afraid to ask, because you may come to me saying, hey, I spoke with my main lender and he said if I do 70% cash out with a 3-year prepay, I'm paying, 2 points. Well, come to us. I'll do 69.5%. We'll do 1 year of prepay. I'm getting you a better rate that way. Right? It's just those little nuances that you can do to kind of trick the game and make sure you're working with the professional.
Yeah, this is why folks at One Rental at a Time need to reach out to you guys. Jonathan, where should we be sending them?
Go to convoyhomeloans.com and let us know you came from ORAT. But real quick, quick example. I have a client right now It's instead of doing like a $2 million loan amount on a bank statement program, we're doing $1,990,999 to be under the bracket.
Okay.
And it's, so we're actually doing that creatively. It's because a dollar less to bring the LTV down. And that's what's allowing us to do all these things. So, it's you just have to know what you're dealing with. Yeah, $1 below to keep the LTV below. Yeah.
So guys, I can't say it enough. You got to work with folks like Convoy Home Loans. We'll go the extra mile and see what's going on. They're in the game. They know what levers to pull. And who knew a single dollar will make a difference. Jonathan, Dustin, thank you very much for being here. Again, folks, go to convoyhomeloans.com, say you came from ORAT, and you get one of these two amazing gentlemen. Thanks, guys.
Thank you.
Thank you.